Good morning, and welcome to our first of three speaker series events to occurring here in 2020-21. Today, we'll be looking back to the future of Santa Barbara housing. I'm John Standring and the president of the Coastal Housing Coalition. The Coastal Housing Coalition is very honored to be hosting this event today. As housing in our community continues to be one of the #1 issues and topics, our goal today and in the future is to continue the conversation and help find a solution to the housing crisis so all community members have a place to live and work on our beautiful South Coast. The CHC would not be able to achieve this without our volunteer board of directors, who I'd like to recognize. Laura Bernard, Vice President, John McCuskey, Treasurer, Anthony Tomasello, Secretary, Olivia Marr, Past President, Ellen Bildstein, Chris Guillen, Krista Pleiser, Brittany Stinner, and Barry Toffer. I also would like to thank our executive director and today's moderator, Craig Minus. In addition to our board of directors who volunteered their time, we would not be able to make this happen without the support of our sponsors. I truly thank you for sharing our vision and helping our organization to continue this conversation to help find a solution to our housing crisis. Our community and everybody is affected by this, and together, my belief and the Coastal Housing's belief is we can make it work. I'd like to give a moment to have a quick message from one of our title sponsors, Yardi. Our other title sponsor, Beachside Partners, Multifamily Advisors. I'd like to give a special thank you to my team over there, Nick Henry, Lori Zahn, and John Koskinen. If it wasn't for you guys, I wouldn't be able to be here, so thank you very much. In addition, we have platinum sponsors, Cameron Pacific, the Santa Barbara Association of Realtors, and law offices of Farver, Large, Archbold, and Spray. Thank you to all our sponsors. Now let's get started on what I think will be a very exciting conversation. Our three panelists are going to offer a very rare opportunity for you to better understand their perspective and what it means to build or not build on the South Coast. Our first speaker, Andrew Fuller. Andrew has acquired, built, developed, and/or rehabilitated and operated over 1,000 multifamily units. Andrew has also been involved in several commercial real estate projects and transactions. Most of the financing for these projects included the creation of multiple partnerships and the raising of private investor capital and commercial bank debt. Additional regular activities have also included evaluation, placement, and management of private investor funds into a series of private commercial mortgage transactions. Andrew holds both a bachelor's and master's degree in business administration from the University of Southern California. He received the Ralph Carson Award for Outstanding Achievement from the USC Entrepreneurial Program. Andrew also holds active professional licenses, including CFA, Registered Investment Advisor, Securities 7 and 24, a California real estate broker's license, and a contractor's license. Welcome, Andrew.
Good morning, John.
Our second speaker is Peter Lewis. Peter graduated cum laude with a BA in economics from Whitman College in 1981. After a year of travel in Europe, Peter came to Santa Barbara to work as a laborer for a general contractor, his older brother, Kirk. Like many visitors, the beauty of the South Coast and quality of life provoked efforts to find roots and create a living for him to stay. In 1982, Peter co-founded Frenzy Designs, Inc., which became a leading manufacturer of women's and men's apparel specializing in leather and suede outwear and sportswear. The company grew to have factories in Santa Barbara, Santa Maria, and Mexico, and maintained import offices in Hong Kong, China, and South Korea, peaking with annual sales of $70 million in 1994. Real estate development related to building factories, retail stores, and showrooms in California and New York led Peter to another career, real estate development. For the past 20 years, Peters has developed and managed a wide range of real estate projects comprising of industrial, retail, live work, medical office, apartments, mixed use, shopping centers, and residential condos in California, New Mexico, Montana, and Idaho. Peter has managed all phases of real estate development from acquisition, design, financing, construction oversight, and property management. Good morning, Peter.
Morning. Happy to hear.
Glad to have you. Our third speaker is John Blair. John began his career with Xerox and IBM before he transitioned into the commercial real estate business with C.B. Richard Ellis. John was one of C.B. Richard Ellis's top national performers and subsequently founded Blair Hayes Commercial in Santa Barbara. He's now operating as Hayes Commercial. John was instrumental in the leasing and sale of many large projects on the Central Coast and developed excellent knowledge of local market dynamics. John then pursued a career in data and technology, where he became CEO of an automotive lease guide and led the company's rapid growth that resulted in the formation of Waybog, eventual merger of DealTrack that led to the successful IPO of Track. John was responsible for managing 3 companies within DealTrack and was one of the 3 company presidents. John retired from ALG DealTrack in 2008 and returned to commercial real estate as a principal, resulting in the formation of Presidio Capital Partners with Andrew Fuller. John is a graduate of University of California, Santa Barbara, go Gauchos, got a BA in economics, and we're very glad to have you here, John. Welcome.
Thanks for having me.
Last is our moderator, Craig Minus. Craig has built a deep background in real estate, urban planning, project management, and financial analysis. For nearly 2 decades, Craig has provided his skills in both the private and public sector. Craig has been an integral player in many of the region's largest real estate developments, where he has successfully applied his land use knowledge throughout the Central Coast of California. Minus is also well-versed in real estate entitlement throughout the area, including Willow Springs Apartments, Sumida Gardens Apartments, Sansun Clinical Medical and Surgical Center at Foothill Center, the Fairview Business Center, and the ATK Aerospace Systems, among others. Thank you for all being here. Craig, the floor is yours. Let's get started.
All right. Thank you, John. And thank you, panelists, for being here. Audience, it's nice to be with everyone today. Again, I wish we were in person, but we were able to pivot virtually last year. And so hopefully it goes just as smooth this year. I too wanted to just take a quick moment and thank our sponsors. Without the sponsor support, the CHC could not do what we do. So we really do appreciate your continued support. I'm excited to get going today, of which we can very quickly. But before we do, I just wanted to let you know, many of you know that I have 3 young boys who've become baseball players, and so I'm also have become a baseball fan. So I just wanted to show off my lucky hat, and if I put that on periodically throughout the presentation, then don't be surprised. And you can't throw apples at me either at the screen. So, so let me quickly expand on the kind of the formatting today. We'll have about an hour discussion with John and Andy and Peter. At the end of the discussion, we will welcome audience questions. If you have a question at the end of the discussion, we're going to use the chat feature in Zoom, and it should be at the bottom of your screen. Most of you should be familiar with chat. Will you please directly chat John Standring? He will be kind of behind the scenes and administering our questions. So if they go to everyone, they're going to bombard him. And so we're going to go straight to him, and he's going to kind of filter those. And we're going to do our best to get to everyone's questions. So we were able to do it pretty successfully last year. I think we can do it again this year. So let's get into it. Today, we have the opportunity to hear from the developers. That's what this session is all about. We've invited them. They're the ones that are in the trenches. They're the ones that are taking the financial risks, and they're the ones that are enduring the unknown obstacles. They're the ones that hope to kind of put all the puzzle pieces together at the end of a real estate project, and provide a successful project for the community. So thank you, gentlemen, for being here today. We really appreciate your time. Let's get going. So, we've heard a little bit about your overall professional accomplishments. I'm hoping we can get a little more local for me. Maybe for John, Blair, why do you or what attracts you to develop housing in Santa Barbara?
Well, there's a few things, but before we start, are you sure you want to unleash 3 developers on a community forum? You got one last chance to pull the plug.
To reconsider.
Are you? One last chance. Well, as you mentioned, I went to UCSB and came back shortly after graduating. My wife and I have raised 3 kids in the community. It's been a great place to live. What attracts us, of course, is, it's the business we're in. We have severe housing shortages within the city and the just general South Coast area. So the idea of being able to solve some of that problem is appealing to us. I mean, we have done some work locally, not that much. We've done quite a bit in nearby communities. I think Andy and I this last year have delivered close to 400 units in communities nearby. So we're certainly in the business, we're capable. We'd like to do more here, but as we'll talk about it today, there are some significant challenges.
Thanks, John. I appreciate that. Andy, any thoughts there? What give us a little background on you? I'd like to know a little bit more.
So actually, my dad came out from Chicago, ended up at UCSB. Met my mom. She was getting her master's there, and I was actually brought home as a baby to Isla Vista. So as our family grew, we moved to Santa Barbara and so forth. But I was raised here, born and raised here, and with my wife, have raised our children here. They want to stay. I think having spent the bulk of our careers developing and operating multifamily, we certainly would like to apply our skills here for the betterment of this community. So yeah, we want to make it a better community, and of course we make it an effort to develop here when possible.
Thanks, Andy. Peter, let's hear a little bit from you. Is that the same story? I mean, I understand you're a resident as well, a local developer. What have you, what are you doing locally? What have you done in the past, and why?
So, I came to town in '82, and as John had introduced me, actually was involved in manufacturing for 15 years of the clothing company. And from that, I gained quite a bit of experience building things, and always enjoyed that creative process. So when I got out of that business, I actually kind of naturally rotated into development, because I had bought some properties, some of which were underdeveloped, and it was kind of a natural precursor to getting into development. And I had some skills that I had gained in manufacturing. So as a result, I've been involved in projects in the Mountain West, and on the South Coast. I've done in the last 20 years, I've been able to find roughly a housing project every 3 years. Some of those have been for sale condo projects, and some of those have been rental housing projects. So for the last 20 years, that's what I've been involved with on the South Coast, and still find it interesting market, very challenging, but tough barriers to entry are also opportunities, and that's why I think I like to do it. It makes for less competition in some regards, because a lot of people throw up their hands.
Thanks, Peter. So let me expand on that a little bit. You've done a number of product types: for sale, rental, and now is there's a little more momentum in rental. Is that accurate? Why are you focused on rental now as opposed to for sale?
Really good question, Greg, because I initially was doing, I did a rental project in Carpinteria that was live work, 36 units down on the beach on Palm Avenue in 2000. That was a rental product. And because rental product really had not made economic sense for a long time. Basically, the rents didn't justify the construction costs, interest rates didn't allow for cash flow to be generated. So over the last 20 years, as interest rates have slowly ratcheted down, the opportunity to build rental housing, which has always been needed, started to surface. So the margins started to be there to make sense. And that's why we saw some effort in the last 10 years or interest on people to build it. And it particularly became attractive in Santa Barbara when they adopted the AUD, which basically allowed for higher densities, improved the economics on it. And as we saw, initially had tremendous momentum. I think we, in the program now, there's almost 900 units, only a couple hundred have been built, but essentially there has been a window of opportunity in the last decade for rental housing. And even before the AUD, I built a rental housing project because it made sense. And a lot of it was just the moment in time.
Thanks, Peter. So I'm gathering there's a moment in time, there's incentive for rental housing, at least today. Between the three of you, there seems to be an interest to work locally, meaning you'd like to work in the Santa Barbara region. I'm talking to three developers that have. So I'm sort of wondering why. I'm wondering why there's not more interest in kind of private development, real estate development along the South Coast. John, am I missing something here? Are there barriers and challenges out there? It would seem to me that people would be flooding to do real estate development kind of, along the South Coast.
Yeah, I mean, it's certainly an attractive market. Santa Barbara real estate's a prized possession. Once it's built, building it is a little different story. Just a couple of things about the development business that might surprise some of the audience. I mean, it's a really razor thin margin business. So when we build a new property, an initial return of maybe 5% on the South Coast would be pretty good. And we all have investors that ride along with us. We have to entice a lender to finance the project. And it has to make financial sense in order for it to get off the ground. And that's challenging before we even get into any of the entitlement process, just that dynamic. The other thing is that just Santa Barbara is highly competitive when you buy anything. So those of you that have tried to buy a home or bought a home know when you show up, there's a bunch of people making offers. Unlike a home where in 2 or 3 weeks, you can kind of figure out if it's going to work for you by getting a inspection, so on and so forth. We're building ground up. So the only thing we really can figure out in this short period of time that the market kind of dictates is what the zoning will allow. And, quite honestly, that's just a starting point. May say you can build 50 units, be 45 feet high, and that's sort of the unicorn out there that, might be possible, but it really isn't possible. So we get into trying to figure out, with our advisors, architects, how, what can we do here? And so you end up with this range of, well, maybe 30 units, maybe 40 units. And it's really hard to underwrite a project because, again, we have to go back to our investors and lenders and say, yeah, we think we can do this. This is kind of our best case. This is sort of the worst case. And you just get into a dynamic where it's really hard to be predictable, which is a lot of what, we really need in order to move a project forward. And that's kind of where the city comes into play in the process that we currently have. I think Andy's going to walk through a flow chart of the project we just finished here. And it's a wild ride, to say the least. And I just think many people in our business, and there's quite a few developers that live in Santa Barbara, talented ones, just will not work in this market because it's just too unpredictable. And we're really in a low margin, predictable business. So when we go to evaluate these deals, if it's highly risky, like a Bitcoin investment or something, we just can't go forward with it. And that's why you see just so few projects go through the cycle. And even, I think we're looking at some of the data, I think less than half or 40% actually get built that get approved, because I think they get through the end of that and realize this is not financially viable. So how am I going to move forward with it? So that's a little bit about, just sort of how the market dynamics work from development business all the way through the city of Santa Barbara process. And, we'll throw around some numbers, but, I was looking at the census data. I think we have 22,000 renting households. And when we look at the numbers of how many net new units we've done through the AUD program as of spring of this year, net new units, it's only 262 units. So when you think about it in the context of 22,000, households renting, it's just really not going to make much of a difference. So those are some of the challenges that we face. And as Andy and I said earlier, we live in the community. It'd be a lot easier for us to drive 10 minutes to a job site than 2 hours, but we have to be realistic and we have to run a successful business. So those are some of the challenges.
Yeah, no, I appreciate that, John. And I want to hear from Andy here, but explain that to me. That's really interesting. Underwriting. Okay, so you're kind of guessing, right? I mean, you're looking at the unicorn and saying that's a pretty unicorn. Walk me through underwriting in a kind of layperson's perspective.
Yeah, that's a great question. So we have to determine how many units we can gain approval for, what it's going to cost to build them, ultimately what rent we can charge, and then that baked into how our financing works will determine the outcome of whether or not it's feasible. Okay. If it has a return, let's say 5%, our investors would say, okay, I can go with that. That's a good long-term investment in a quality community. If we say, well, we might get to 5%, we might get to 7%, or, we might also just get to 2%. It's a really tough conversation to have, so an investor might look at it one way, but a lender, as some of you that are in the banking industry know, they have to rely on certainty. So that process is, it's very detailed. They get into every line item of our financial pro forma and have to verify that, yeah, this is going to work. And so when you're kind of going with ballparks and ranges, unlike maybe building a spec residential house, you might say, yeah, we hope to get this much for it, but if we don't, we're okay if we get down to here. Ours is highly specific, highly tailored, very exacting. And so having this big question mark as to what we could what we're going to actually get approved. And the problem is, as Andy will show you, it takes so long to get out the other side of that chute. You really don't know until you've spent a year and a half, 2.5 years spending a lot of money to get to that final answer. So that's really what we mean about underwriting and why it's so difficult.
No, thank you. Yeah, thank you. I mean, it sounds like there's a few dials that go into it, right? And if you tweak your dials and they're tweaking in the wrong way, that can have big implication on the financial performance. So, exactly. So your guesswork has to be pretty tight, or you hope it doesn't stray away from your guesswork along
yeah, the way. As I like to say, I think you need a plan A, a plan B, a plan C, and you probably need a plan D, because they're all possibles. And as Andy will take you through an example, we hit every one of those benchmarks.
Yeah. Well, good segue. Andy, I know you did a project recently. You and John did a project recently, Plaza Riviera, kind of on Cannon Perdido. You can walk us through that. But, I'd love to hear more about your real life experience and getting that project completed. I'd love to hear anything you want to share. I mean, that's what today is about, is to give you the forum to hear from the developer, their experience, and, particularly at Plaza Riviera, and then, how that compares maybe to other areas as well.
Sure. And, keep in mind, as we all know, so the developer is just the guy or the guys who basically assemble the land, the labor, and the capital to try to make something work. And it has to work for a yield that would justify its effort. So for example, as Peter was mentioning earlier, in past eras, let's say you could put something together and it would only produce a 5% yield, and yet the banks were lending at 6%. So if you had to borrow from a bank at a higher rate than the assemblage of land, labor, and capital that would produce a 5% yield, you wouldn't do that activity. In today's market, fortunately, we're still assembling these things at about a 5% return. It is a razor thin business, as John's mentioned, but we're able to borrow from the banks these days at 4.5%. So we're borrowing at 4.5. We're producing something that creates a 5% return, and therefore there's a razor thin margin, but that at least justifies the activity. So that kind of in a larger context is kind of how this all works and how the underwriting.
I mean, that's another dial. I mean, going back to what John was saying about this underwriting, that's a prediction you're making. If that money, if that lending interest rate changes, you better have a plan B, plan C, plan D, right? Like John was saying.
Yes, and also you're making certain assumptions about what you can assemble and what that assemblage would yield. And there's only so much tolerance there for something to change, and then the yield no longer is there, and then the effort cannot be justified. So that's a case. So let's talk about Plaza Riviera. So John and I, we were.
Before you go, I mean, take this is your commercial. You can brag about it for sure. Give us an overview. I'd love to know more about it. I think the audience would too.
About the assemblage of effort and so forth. I mean, but well, maybe we'll walk through this one, and then this will kind of give you an idea of how this kind of comes together, how you look at it. So John and I were encouraged by the AUD program. We came across a piece of property that was formerly known as the McConnell's Ice Cream Factory and also California Dry Cleaners. We had the opportunity to buy the site from the family that notoriously owned and operated McConnell's, and then from the successor of that. And so we decided to go forward. Furthermore, we really liked the site because it was flat. It was bounded on we had basically frontage on all three sides. It's about 3/4 of a block. And we, based on the zoning, we could accomplish the height, and we could achieve a density that would make it all worthwhile. And finally, we looked at the AUD maps, of course, in preparation for making an offer. And we noticed that on the AUD map, this property was designated as a high density, high priority infill site. So we thought, okay, we've got a site that is great, is a great flat, bounded on three sides, almost a full block, in an area where it's basically an ice cream factory and a dry cleaner that's pretty old. The adjacencies are multifamily and industrial. The traffic is there, the street development is there, everything is there to make something work at this site. And at that point, in the way this business works, we couldn't just buy that one particular piece. We had to buy basically that piece and an assemblage across the street as well, because that's the way the family trust wanted it to be done. At any rate, we moved forward and we closed the escrow and we started the design process. Now, before you ever even get to, and I think there's a set of slides here that shows the process, and before you ever get even to your first hearing, it's worth noting that you have neighborhood meetings, you meet with planning staff at the city, and you go through a whole process to prepare before this thing ever is presented to the public. So there is a whole bunch of behind the scenes work, high touch work that's done in order to plan for your first round of presentations on the public hearing level. Now, let's just look at this. You're going to see a whole bunch of dots on the page. You're going to see actually about 14 hearings that John and I had to endure. So if you take a look,
is that a lot? I mean, is that a lot?
14 hearings based on, so as John mentioned earlier, we've developed basically in Santa Barbara County, Ventura County, Kern County, in San Luis Obispo County. And yes, this is about 10 more hearings than usual.
Okay.
Yeah, so your average number of hearings is anywhere from 1, 2 to say 4, 5, depending on how controversial it is. But to go 14 rounds is pretty extreme.
Okay.
So let's just take a look just to kind of walk you through this. So we go to the architectural board review for our first hearing. The project is 50 units and 38 feet tall. Now, the zoning and the area would allow us to be 45 feet tall. So we could have gone into 45 feet. We chose to go in at 35 feet to try to be as consistent and compatible with the neighborhood as possible. And the adjacencies supported it too. We really weren't much taller. I think the tallest adjacency at the time, I think, was like about 33 feet. So we really weren't out of line with what was already there. The ABR asked us to go back and make some minor corrections, again at 50 units and 38 feet. That was a second hearing. And at that second hearing, they basically sanctioned us to move forward to the Planning Commission. We went to the Planning Commission at 50 units and 38 feet tall. We achieved a 6-to-1 vote in favor of the project to move it back to the Architectural Board of Review in terms of, moving along the final approval process.
I mean, you're making good momentum right now, right? This is good.
This is positive. I mean,
Okay.
it's 3 hearings in a row, 50 units, 38 feet tall. It's gone 2 rounds ABR. Planning Commission likes it. We're moving ahead. This is encouraging. We get to the 4th hearing at the ABR. All of a sudden, there's talk about lowering the height to 36 feet from 38 feet. After we'd already gone 3 rounds and was sent to the Planning Commission at 38. Round 5, we're hearing more about this 36 feet, and we start pushing it down. We come back at 36 feet tall, hearing number 5. Hearing number 6, the discussion starts going to 34 feet from 36 feet. Hearing number 7, we're really starting to struggle. And noteworthy about this architectural board review, by the way, I remember this so vividly. At hearing number 7, there was an interior designer that just joined the board that day. We respectfully asked that interior designer, new board member, to recuse herself because she was not familiar with the history of the project, and it would be very difficult to vote on it this late in the game. We just simply asked her to step aside during the vote. She refused. At hearing number 7, she voted against the project 4-3 for 34 feet, and we were denied based on that. At that point, we were in a really rough situation. We had gone thus far. We could not make the project work at 34 feet. It just simply wouldn't work. The only thing we could possibly do in order to make this work is to cut the density. And it's ironic, right? So this is a high priority, high density infill site, and the beat down from 38 to 36 to 34 feet was so aggressive that it cost the project 9 units, which is really contrary to the intention of the program. We came back with a redesign project with only 41 units at hearing number 8. And we were moving forward with positive feedback once again. Hearing 9, once again, we finally got approval of the entitlement actually in hearing number 10. And then we went on for several more hearings to get the design finalized. But it was a very long, drawn out, frustrating process. And probably what was most frustrating about it is at most other municipalities, we have essentially a planning commission. And in the planning commission, there are planners, and there are usually city attorneys or someone else. And the planners are given a fairly high amount of respect, and they tend to keep the decision makers on track with what is basically within the purview of the decision makers' responsibility. At this ABR process, it just seemed to be that it has discretion gone wild. Discretion that was applied that really wasn't appropriate. It was purview drift, an extreme version of purview drift. And I would say after going through this process, we certainly think that anything that can be done to reduce purview drift, to get a planner that is in the room, that has some respect a city attorney that sits in the room and keeps everyone within, you know, the guardrails, that would certainly help this process. But this is what we went through to accomplish the project.
Thank you. I mean, it's very telling. So let me understand this. I mean, when you were underwriting this, I mean, is this a plan? Is this a plan A or a plan B or a plan C? I mean, do you have to prepare for this, or, you know, would you maybe prepare to lose a couple units, but really, I mean, you lost what, close to, I mean,
We lost 9 units,
right? 20%.
Yeah, we lost 9 units. Yeah. Now, you know, essentially what it was is it was a 50 unit project on a podium, on a concrete podium, which is more expensive. And it was then became 41 units more conventionally built. So in reducing the density, we were able to both lower it in terms of height, and we were able to go as a conventional build, slab on grade. So we were able to wash some of the cost out of the project.
Well, you had to, right? Because there would be no project had you lost 9 units, had you stayed with the podium. I mean, at that point, we wouldn't have another rental project in town. Right?
No, Craig, and just real quickly to jump in, at that point in which we did the redesign, all along we were talking to, because we were feeling like we weren't even going to get the project approved for anything. So we were negotiating with an office adaptive reuse developer, very capable, that wanted to take the existing buildings and create kind of tech offices. And we were having very earnest conversations, and Andy and I looked at each other right for the redesign and said, we're probably not going to get anything approved here. So that's when we're getting down to like your plan CD.
Mm-hmm.
Yeah,
Mm-hmm.
that is correct.
And I don't expect you to remember this, but like, what was the percentage impact on rents? I mean, with that reduction, I mean, what 9 from 50 is, 18 per, I mean, you got, that's significant less. I mean, that's when your underwriting starts to unfold, right?
And it's worth noting that you really can push rents only so far. I mean, there's only so much capacity. So it's not as though you can just raise rents to justify whatever. So I would say you're also having to look pretty aggressively at cost in your redesign. As I mentioned, we went from essentially a podium project that would allow us to achieve the 50 units, which is certainly more expensive, to a 41 unit project that was slab on grade, that allowed us to, you know, still maintain the underwriting.
Okay. Yeah, thank you. And again, I mean, AUD, it's right in our wheelhouse as far as the Coastal Housing Coalition. We're trying to get, housing available to those, workforce families, if you will, but that moderate, upper moderate 120 to 200. So again, that was the intention of the program. I think that's what you're intending to put down, but so we do have a rent limitation there, not only from what the community can afford, but also I think trying to put that segment of housing for that segment of population as well, right? Yeah. Well, great, thank you. I mean, I think we're kind of getting into a very robust conversation. If I was to summarize that, I think the housing policies, the process is a big factor. I mean, that's what I'm hearing. You have to anticipate that in your underwriting. If you're wrong, or if it takes longer than expected, or there's additional cost, that has an impact on your ability to deliver the project. But Peter, let me kind of get you back engaged in the conversation. If the policies and the processes are dialed in correctly, let's just say everything's going smooth. Are there, if that's a static, are there a lot of, opportunities in the multifamily housing development out there? If you can predict the process, well, is there a lot out there to be working on?
So no, I think that's the sad fact, is that it's a very tight, limited market relative to opportunities. And I do, for me, I look at probably 50 projects a year, maybe, that kind of come across my desk as possibilities. And as I said before, I have found in the last 20 years, one about every 3 years. So I'm cycling through 150, I do quick kind of on a napkin calculations and coming up with one out of 150. So that gives you an idea how few opportunities really exist. Now, part of it is the density that doesn't provide for a return. And part of it is that it's really hard to get any sort of assembly of multiple lots to give you the scale that you really need to make the pro formas work. Andy and John just were talking about, that's a really nice site. You don't find many 3/4 of an acre flat sites in the right zoning with the right priority. That's really rare. And so typically you find things that, I tend to look for things that nobody else is thinking about and try to be more creative at seeing opportunities where others don't, or maybe an old property that's kind of tired and beat and forgotten. So,
But along those lines, Peter, you're using like in the city's example, you're using the AUD maps to guide where you might get additional density, right? I mean, you can't just go out and say, I can put X units anywhere. You kind of have to follow those guidelines. So you're kind of limited there, right?
yeah, for sure, you're always limited. Whatever opportunities come across my desk, the ones that are in the higher density always pique my interest. So
Okay.
those are the first to get my attention. But it's still hard. A lot of times you need to put together a couple of lots in order to get the scale. In my view, it's really hard to develop a property in this town, apartment-wise for rentals, less than 25, 30 units, because the soft costs, ironically, are almost the same whether you do 20 units or whether you do 100.
What's the soft cost?
So all your consultants' costs, your architectural costs, your permit fees, if you buy the land in advance, your interest, your carry cost. So basically all your costs unrelated to the actual construction contract are soft costs. And it's ironic that you really need the scale to justify, to get to the point of a break even. And so if you need a project of 30 units really to make sense, to provide a return, you got to assemble lots a lot of time. It can't be done on one lot. There's if you look at the parcel maps, it's pretty clear. There's very few, particularly in the downtown corridor where the AUD is. You've got narrow, deep lots, which are actually very difficult, if not impossible, to develop unless you get a couple of them, 2 or 3 or 4 assembled together. And those usually are multiple ownership with different motivations, and it's hard to put them together.
So in that case, you'd have to work with multiple landowners, is that right? I mean, one of which may be interested, one may, has no interest in selling you the property. So it kind of has to be like that, like John says, that unicorn is out, and you have to find the unicorns.
Yeah, I think I look back on the 8 housing projects I've done, half of them have involved assembly. So half of the opportunities required assembling 3 lots or more. Okay. So that's a dance with multiple owners.
Yeah.
Trying to get them all to sign on to the same strategy or purchase from them, right? It can be a combination of those. But as you can imagine, you're not dealing with one party, you're dealing with multiple parties to make it all work out.
No, that's interesting. And then, I mean, I'm familiar with the process, and then going back to John's underwriting example, in that whole scenario, you're now anticipating what you might be able to do there, how many units you might be able to get, how quickly you might be able to get through the process. And again, if you're wrong in any of those assumptions, then your financial feasibility of the project could be entirely wrong, at any point in the process, right?
Yeah, for sure. And John is right to always you're going to go into any project with numerous plans, although, and you have to pivot all the time. That's not unusual. But I generally like to look at a project that I believe from the onset I can get plan A. So of the 8, I've never been able to, there's been one that I was not able to get to plan A. But I use pretty conservative parameters of what plan A is. So in some cases, maybe I've even done better than plan A, but I'm using a pretty conservative. And a lot of that is because, I've been building in this town now for 30 years. So I understand, the process of limited expectations is helpful in your analysis. And therefore, I don't waste my time on things that I think maybe others see opportunity that I look at and say, there's no way they're getting what they think they're getting. Just from a political standpoint, not a zoning standpoint. And that's really what Andrew and John are pointing out. That's our disconnect in this community. There's a difference between what the zoning allows and what most people get approved. And so it's that discretion that causes a lot of these failures that we see now in the statistics that John just pointed out. We have a failure rate of about 60% of applications in the AUD, and possibly higher depending on how you treat the expired and the withdrawn applications. So 60% of the people are throwing money down the drain, walking away, licking their wounds. And I think Andrew and John, if they're honest with the public, they feel, even though they have a highly successful project that the community should be proud of, they felt pretty beaten up in the end. And that's the thing that it's not exactly easy from a developer standpoint to accept when we're providing such an important, critical product for the community.
So, thank you, Peter. That's really, really helps kind of explain your position. Kind of going back to the policy, and I guess dialing in on what is a hot topic and a work in progress, inclusionary housing policy. How does something like that, either in the beginning, as you have bought a project or starting a project, or if that changes throughout the project, how does like the increase in inclusionary affect your ability to develop new projects?
Well, so it's interesting. Let's really talk about what the purpose of that is. It sounds pretty good, on an outside vantage point. Oh, okay, we're going to require 10% of the product to be at workforce housing rental rates. Well, we're going to get some affordable stock to be included in a new project. So the goal sounds valuable. It sounds like it's something we should work towards. Like all things, like many things, there's unintended consequences. And frankly, this program, really, the data is so glaring as to what happens. The reality is that there's an inclusionary element is basically an additional cost to the developer to make the project pencil. So essentially, you're adding a huge cost to an already low margin, high risk business. And it really makes for fewer projects. So think of the irony of that. You have people that believe they are voting for more housing to be available for the middle class. And really what they're doing, because of the policy, it reduces the production of the housing units. So they've actually removed housing from the community. So they think they're voting for policy, public policy that's going to create more housing that's affordable. And in reality, all these AUD or middle-class housing are not getting built because of the added cost. So it's really unfortunate in my mind, and I'm very liberal on a lot of issues socially. I personally am a big advocate of affordable housing that should be done by, through public processes and company, ways to do that. And all people, all members of the community should participate in helping us produce affordable housing. But for private purposes, inclusionary, the data is crystal clear. It is a disincentive. It reduces production of housing. There's no other way to interpret the data. And it's really unfortunate. So when politicians tell people I'm for housing and they vote for inclusionary, they're misguided. And I'm not saying that that's what's so frustrating, is that the conversation gets lost on what are the unintended consequences. And the AUD has suffered. In fact, in the last 3 years, basically the whole program, the inclusionary, was adopted 3 years ago. And since then, the whole program has gone flat. And whatever new projects, I've been involved in 2 of them, almost 120 of the maybe 100, close to 200 new units. I've been involved in the majority of them. So I'm aware of, think about that. How crazy is that? One person is involved in at least half of the units that have come forth in the last 3 years. And so it's really something that I find really hard to accept. Perhaps the thing I always like to tell people that I feel kind of simplifies the irony that I see. And this is an industry that is on razor thin margins, lower than any industry that all of us are familiar with. And it's high risk, right? We see 60% of these applications don't even proceed, so people lost money on them. So not even half in our community proceed on a profitable basis. So you got an industry that's high risk and low margins, and imposing a cost on them to subsidize 10% of the tenants. So we don't require Whole Foods to give groceries to 10% of the customers at cost for their life. We don't require our Ford dealership to sell 10% of their cars at cost, or possibly even below cost. So it doesn't make sense to me. It's such a fundamental disconnect between incentivizing production of housing and disincentivizing it. We think we're doing good, and we're actually creating more trauma to an already acute problem.
There's a subtlety here, though. The cost to the developer. I would argue it is a cost to the project. Again, the developer is assembling, land, labor, and capital, and only if those 3 things can be met, the developer would be the last to get paid, if any. But the project, the project has to meet a certain threshold to have economic life. And as I mentioned earlier, you can only push rents so high. So for example, if you had a 10-unit apartment building and 20% was required to be inclusionary, you would have to increase rents to the other 8 residents, the other 8 renters, in order to subsidize the 20% that were the inclusionary piece, the other 2 units. So I think there's this misunderstanding, or this kind of misplaced belief somehow that, we can just impose this, the developer will pay. It's not the developer that's paying, really. It is the project is just not feasible, and the other requirements of the project still have to be met. Maybe it's the developer paying at some future point down the road because it just takes that much longer to ever see, any economic benefit from the project. But the reality is it's a perverted way to address the problem. I think it's a public policy issue. The public should pay for affordable housing. I agree with Peter. I think John also agrees. We're in favor of affordable housing. I think we have no problem with our tax dollars going to pay for affordable housing or other taxpayers' dollars going for that. But to impose it specifically on projects is really burdening the renters that are paying the market rate.
And I thank you, Andy. And again, this organization, I'm a housing advocate, and I recognize the need that I would like to see all income levels to be able to live and work in the same town if that's what they choose. Inclusionary seems like a really good concept to me. I mean, even from a planning background. So, I'm going to push you guys a little bit on that. I mean, is there a sweet spot? I mean, if we give you density, can't you squeeze in a couple more affordable units? I mean, and again, affordable at what level too, I know makes a difference, but is there a sweet spot or not? Why is it so hard?
So, it's interesting because the inclusionary requirement is done at cost if you're lucky, right? So the state has come up with bonus density programs basically with this in mind, right? That they give the bonus units as affordable, the developer will do it at cost, but because they get the added units, it'll still give them the return that they need to make it feasible. So, and the state has moved to adopt more pressure on local communities so the NIMBYs don't stop these developments. In essence, they are forcing the project onto the community and trying to streamline the process, which is all good, lowers costs. So I think in our community on the South Coast, that has come into a bit of a gauntlet, really, because our own city attorney in the city of Santa Barbara has said, well, bonus density, you have to meet both the requirement of bonus density for the state, and you got to meet the local requirement, which is actually not as high as the state requirement. So you got to combine those two. So that essentially destroys the ability to look at, until the city attorney has changed their position on that, it's going to be really hard to make those things work. Or you have to negotiate. I think in the case of the Milpas project recently, they negotiated specifically with the city on what they would allow. But you don't want that. You want objective standards. You want policy to be clear and precise and predictable, hopefully. But the reality is that probably in our community, the biggest problem is if you were to get this added density, it highlights the very problem that the discretionary review you face in the discretionary review, because the bigger the project, the more mass, bulk, and scale issues you have, the more neighborhood opposition you have. So there's two forces kind of tugging at each other there that make it difficult.
Okay. I mean, I think we're kind of deep into this. I mean, I think this is one of the cruxes is that inclusionary is one of those levers on your underwriting, on your pro forma. You have to, if that changes, or if you get that wrong, or if the mix isn't right, the project is never going to come out the other end successful, therefore never going to get built, and we lose. The community loses. But that's interesting. So let's kind of pivot that a little bit. What about AUD? I mean, you guys did an AUD project. That was the incentive here.
Mhm.
I mean, open discussion. I'm not going to point this to anyone, but what about
Yeah.
AUD?
Well, I mean, AUD, I'll just jump in. I think at the outset was a really positive opportunity, and you did see some projects go through. Unfortunately, the project that got the most notoriety was the Mark up on Upper State Street, which was 89 units. And I think that kind of freaked everybody out that there was going to be an armada of developers coming in and building skyscrapers everywhere. And so that caused some of this backlash. And I think by the time Andy and I got through the process, we had a lot of community opposition, not from the neighbors, by the way, from other people.
Okay.
And so, it got crushed before it really even got started. And I think when you look at those numbers and a lot of these things that, Peter and Andy and I have been talking about, if you just have to look at the scoreboard, as painful as it might be. And, when you only have, 250 units or whatever it's been during the process, that is your scoreboard. So it just kind of shows what comes out the other side of it. So I think
Well, I mean,
AUD on the
well,
surface was.
let me
Yeah.
stop you there real fast because, I mean, look, this might be a personal opinion, but I commend the city for, that density program. I think the thought was definitely there. I mean, I don't see a lot of, there's not a lot of other people that are kind of doing that progressive. So like help
Yeah.
us get me through, like, okay, if we were in hindsight looking back on that, like what
They
was
should
it
have
good?
just-
Was it a good thought? Was it a good
Yeah,
process?
absolutely. They
Where
should
did
have
we
just
go? Yeah,
they
where
should
did-
have just stuck with the program. The program was designed to work. I thought the city staff did a thoughtful job identifying sites like the one we chose to say, does a dry cleaning plant belong in the middle of a residential area? No. So that's a good spot to put a higher density project. So I think we were all excited about that. So yeah, I commend the city on the AUD program. I think they just should have let it be what it was designed to do. And unfortunately, midstream, it just changed. And it didn't really, getting through the city process, the architectural process was still extremely difficult, but you could kind of make it work. And I just think that got ratcheted down even more than when the inclusionary element was put in. Think you're just trying to have, we have problems in housing at all levels, market rate housing, affordable housing, and they're all important, but to try to make market rates solve the affordable equation just ended up not being the right move. And, again, the numbers bear that out. There's been a trickle of applications since that's been implemented. So
Yeah.
I think they did a good
Pick up
job
on that.
launching it.
Okay, I mean, Andy, Peter, this trickle of, explain that a little bit. What's going on?
You're talking about the AUD program slowing down once the inclusionary was introduced?
Yeah.
Sure. I think, do we have a chart that speaks to that? I think, Peter, you were the one that kind of brought this to the front.
Yeah, the reality is over the last 3 years, the whole program has plateaued. They've had some projects expire, some withdraw. And of the 100, and this just really shows you the momentum was lost. And part of that is really unfortunate because I'm a believer in the AUD. I'm a believer in downtown housing. And the city has done some really good things to amend that. In just last year, they put through a couple amendments. They got rid of the donut hole in the CBD, the downtown business district. They changed the parking standards. They unbundled the parking. They increased the height 3 feet, which helps a little bit. And they've changed the open yard requirements. So actually, planning wise, there's been some significant improvements to make the economics work out. But the program has basically lost opportunity and lost momentum. And it's, there's no doubt that the fact that people are not applying on, and there's not much momentum on this, indicates that the economics are not particularly attractive right now post the inclusionary element. And I built condominiums in 2004 and 2006. And that program, the condominium market collapsed prior to the actual national recession, in large part because you couldn't make sense of future projects when they brought an inclusionary into that. And there's been very little condo production in the town since then because of the inclusionary element. So it's the same thing. I know it sounds good, but it's not a cost that doesn't come without consequences. And if our goal in an acute condition is to produce housing, whether it's for sale or for rent, then everything that actually adds to the cost or reduces the production, in my mind, should be highly scrutinized, and to make sure that we're really understanding the outcomes. And the outcomes I'm looking at are years down the road, because a vote is easy to say this is a nice progressive move. But if the progressive move reduces the production and the actual inventory, it's a problem.
Mm-hmm. Mm-hmm.
You also mentioned real quick, bonus density for inclusionary versus inclusionary being a
Correct.
requirement. Those are two different things.
Yeah, so that's right. So in the city ordinance, inclusionary is just, it's part of whatever you're entitled per the zoning. Bonus on the state is in addition to. So that's how they incentivize. Theirs is more of an incentive than a disincentive. The cities is a disincentive completely.
So the chart, I don't know if that's still showing or not, but the message you're trying to get across there is the units that have C of O, right, certificate of occupancy, right, they've been permitted, they've been, built, they've been signed off, they're occupied, if you will. 193 for the high density private only. I mean, this is not affordable. And then 96. So you're saying that is a low number given the longevity of the program? Is that what you're saying?
No, actually, those don't have inclusionary requirements. There has been no project to date built with an inclusionary requirement under AUD, right? They just adopted this 3 years ago.
Mm-hmm.
Now, I have a project in the system right now that's 78 units downtown that has a inclusionary component. I've been able to make it work. But of those numbers up there, those are all ones that have gone through the process under the original AUD program that did not have an inclusionary requirement. And think about this. We know that 60% of these projects, almost all of which do not have an inclusionary requirement, have failed, right? Those have failed to come forth without inclusionary. So what would our failure rate be if the inclusionary had been in there? It'd have to be higher, right? So we already got a high failure rate. You add to the cost, you reduce the revenues. Any way you look at it, you're going to have less projects. So these numbers only reflect the original AUD program relative to building permits and C of Os.
Okay. So, okay. So enough complaining. I mean, how do we, John, I mean, how do we fix the housing problem from your perspective? I mean, I have to say, I think, AUD, we tried it, right? I mean, that it had good intentions, and I think your guys' feedback on what changed throughout the process and how that was, caused heartburn. I think that's really important. But I hope something like that is not over. I think, that sort of, density incentive is good. You know, let's kind of spin this a little bit. You know, again, how do you fix this problem, John? How do you,
Yeah.
what can we do?
Well, I think there needs to just be a level of trust and confidence between the city and the people doing the development. You know, we've talked a lot about how our business relies on certainty in order to accomplish the goal of getting a project built. It has to have financial viability. We don't really know at the front end what the result's going to be. So that causes us this big problem. So somehow we need to get to a point where we can be reasonably confident that if the zoning allows for this, and it meets a variety of conditions, you know, maybe there's some early way to say, you know what, this, you're going to be in this range, underwrite to this level, and you'll probably, you know, you can accomplish that. That gives us the confidence to say, okay, let's go ahead and do this. You know, I do think the approval process, you know, with AUD in particular, the ABR, the Architectural Board of Review, pretty much has 100% control over how the process goes and what gets approved. And I've always thought that's really a lot to ask of a volunteer group that comes in, that all have day jobs, you know, running their architectural businesses or landscape design or design businesses. You know, they're not urban planners. It's not what they do. They're not elected officials. They don't owe the people of their district, you know, to meet the promises of providing more housing. And they get thrown into this just crazy atmosphere with intense public comment and people like us trying to, you know, make our projects work. So I think that could be modified and improved. Other cities will have, let's say, the planning commission go through that process of deciding what should get approved, how many units, parking, so on and so forth. By the time it gets the architectural board review, they're doing what they do best. They comment on architecture, they help make the project fit better into the community. So I think that's one area where things tend to get sideways, as Andy's charts showed.
Mm-hmm.
And just having that city leadership and staff say, hey, housing's important to us. We're going to make it happen. You know, how do we reach out to people like Peter, Andy, me, and others?
Mm-hmm.
And let's build some kind of a trust there so we can actually have the confidence to commit the capital and our resources. So you know, it's not like we're down on Santa Barbara and we don't want to, I mean, we all live here. We love the community. We'd love to see help solve a problem. So that would be just some thoughts.
Yeah, no, and again, that's what the purpose of this is, I mean, to hear from you guys have completed a project, right? You've gone through it. And so what can we learn from you guys? I mean, that's interesting that, I mean, you want more approval bodies. I mean, I hear you saying that, you know, if you would go back to the planning commission, you know, my understanding of AUD was to simplify the times you have to go to a decision maker. So,
but the irony is it was meant to speed it up, but it went the contrary was the result. I suggest that the state of California has already given us a lot of guidance on this matter. You know, they come up with the Housing Accountability Act. They talk to establishing objective development standards. I think it's really important to have, I don't want to say this in the wrong light, but to have an adult in the room when these hearing bodies are assembled, to keep them from purview drift and to keep them kind of corralled, to make sure that the decisions are made in the context of the objective standards, or at least reasonable standards, and that those standards are reasonably applied. I further suggest that it would be a good idea to get an economist to get involved in looking at some of the local housing policy, just to help the decision makers know what's at stake and how kind of the basic economics work. They don't have to listen to, you know, the developers if there's some maybe distrust there, but to get an economist in who acts as an independent, to do an independent analysis and to help guide, you know, local policy and understanding.
thanks, Andy. So, I mean, very good feedback. John, you know, a better relationship, you know, stronger kind of upfront. You know, Andy, I'm wondering, like, do you feel that you were heard at Plaza Riviera, or that communication was happening?
I felt,
was it different there than like in other communities? Like, what?
Yeah, it's very different than in other communities, in as much as for example, I brought up the fact that that one individual joined the board on hearing number 7, refused to be recused, voted against the project, caused a completely different direction for the project after all that effort, at great cost also, and then was no longer on the board at hearing 8. They had left the board. To have that kind of ad hoc, there just needs to be a lot of process improvement that's introduced. So I would say, now to contrast that with other communities, again, other communities, you'll have the planner, you'll have the staff and the lead planner in most all hearings. You'll have a city attorney in most all hearings. And you have the decision makers, applying discretion, but within bounds. And I actually think it makes it much easier for the decision makers, because even if they do kind of overreach in a positive way, and let's just say they say, I don't think it should be that way for this reason, and I really feel strongly about this. Okay, that's great. But then there'll be someone in the room that will say, listen, that's true, and I understand where you're coming from, but that is not within our purview here. That's a bit of an overreach, and at least that allows that person to have to back off. So it allows for some control, and it allows for also some guidance in the process, for sure.
No, that's great. I mean, if you can bring these solutions, I love hearing, what your other experiences are, because again, this is a ebb and flow process. It's, it's continually a process improvement. So, I mean, that's really good feedback. Thank you. Kind of Peter, you want to weigh in here, keeping kind of with the theme of strengthening relationships and partnerships. I guess at the end of the day, developers kind of still tend to get a negative perception, in your own words. Is that, how would you respond to that? Is that true? Is it not? How do we improve these relationships?
Well, it's interesting because I think John points out, trust is really important. And I think people that build housing need to be treated with the respect that we would treat anyone in any other industry. And, we're providing an essential service that has acute inventory problems in our community. And the thing that always I find ironic about the South Coast in particular, because we always think we are a sustainable, environmentally oriented community, and we're interested in community, but our approach to handling development is not really that way. It's not very simpatico. They're treated as an adversary and a challenging process, and the NIMBYs have taken over. So whatever way we can pivot to start to understand our community needs this industry, it needs the inventory. We shouldn't be exporting all of our workers to other communities to be housed in different counties even. I mean, think about how unsustainable that is that we do. We send people out onto the highways every day, coming and going hundreds of miles, because we have not been prepared to find housing for our own workers. So I just think we need to all be more tolerant, more community oriented, and housing is a fundamental, essential business that's super important. And right now, the planning staff has done a really good job. I think they're looking hard at how to sustain this industry, how to build housing, and the recent effort to adopt a FAR to make things more objective, where the floor area ratio is used instead of other things that aren't quite as clear. That's a very positive movement. And it gives clarity to the public on what is allowed. And I think if we can find ways to make the process better and more human, we're going to have success. And I look at, like, and Andy's and John's project, I doubt any of the people that were really against that project would actually are against it today. I mean, it's a beautiful project. It's housing a bunch of people. And, but we've set up this system of adversarial roles and portrayed an industry as being greedy. We're not greedy. We work in a tough industry with extremely low margins, and it's a fun industry. It's creative, and we know we're doing a good service. So I think the city's done some recent things that actually are very positive, and I think the community itself is very positive about realizing we need denser projects in downtown locations. We need to adopt a greener work ethic in terms of what vehicles we use and thinking about getting away from the vehicle and into bicycles and into walking. So the community's working in the right direction, and I'm optimistic. You know, I'm in the twilight of my career, so you know, I do this more for passion, frankly, at this point than I do opportunity.
Yeah, no, thanks, Peter. I'm gonna start to wrap it up. I want to leave enough time for questions. I think we have a number of questions from the audience. So again, right before I do, you know, Peter, or I'm sorry, John, Andy, you know, we've given you, you know, today's was to give you guys the floor. I mean, it was to really hear from the private developers, you know, what you go through. Are there any last words of wisdom, I guess, to offer in pursuit of, you know, making housing more obtainable along the South Coast?
I mean, I think we've covered a lot of the ideas and challenges, you know, ideas to fix things and challenges that we encounter. I think I applaud you for hosting us today and, you know, letting the three of us, you know, kind of air just our side of the story. I mean, it's rare in a community forum that you actually include the developers. It's usually city officials and designers and such, and that all makes sense. But I mean, I think just, you know, when those types of design charrettes or whatever are going on, maybe including somebody like Peter, Andy, or me, or other people, there's plenty of talented developers, to just have that input to raise their hand and say, hey, you know, this would be an issue for our side of the business. So that would be something. No, I think it seems like we covered a lot today. We really appreciate it. So yeah.
Perfect.
I would add to that, you know, remember there are no solutions, there are only trade-offs. And for all sides, just remember through this process and through any kind of a housing review that there needs to be a give and take. The community needs more housing. I think everyone's on the same page in that regard. I think certainly the planners want to move more housing through the system. I think the developers want to provide more housing where they can. And as John and Peter mentioned, it's going to take trust and it's going to take people to be reasonable on all sides. And I also think having somewhat of a more regulated process in terms of the review process would certainly help. And again, that would mean, you know, defining objective standards, having a referee in the room to kind of keep everybody within purview and to reasonably move projects and review through the system.
Good. Well, thank you. I mean, this has been a great discussion. You know, we thank you for participating today. Again, that was the purpose, was to show all sides of this. And we thought, you know, giving you guys the floor today would at least kind of, you know, keep the conversation forward, keep it, you know, progressing in the right direction. So thanks for your time. We have probably 20-25 minutes to questions. I think we have a ton of them. So I'll get to them. We can go over if we need to, but we do probably want to respect everyone's time and try to shut down by noon. So let me get there and excuse my eyes going up and down. I got to kind of read these, but speaking of trade-offs, are there other trade-offs that a local agency can offer to offset the long-term revenue lost by subsidizing some affordable units. In lieu fees do not amount to enough funds for an agency to build units themselves.
Yeah, so that's the fundamental question, really. There's no doubt to a developer, an in lieu fee is probably a little less impactful on the cost than a perpetual subsidization of 10% of their tenants, right? Which, I didn't really make the point, but one of the things that bothers me is how inequitable inclusionary housing is. I mean, you think about it, 10% of the people in your complex have a windfall. They just got lucky, and they're living with the other 90%. So it's like winning the lottery. So there's a little inequity that I don't even like what it produces in the community itself, in the building itself. I have yet to build one of these. I am going to be building this one that I was describing earlier come the spring. So I'll have more personal experience as to what if any tension that builds. But I know, that's the interesting thing that Renee points out, is that, if the in lieu is not enough to build affordable housing, it highlights the tremendous cost of building housing in this community. And it's one of the things that we just don't like to accept. This new project of mine is going to be well in excess of $300,000 a door. Well, there's nothing affordable about $300,000 a door, right? And these are small units. So if we can get off of the topic of forcing even additional costs onto that 300,000 and get more to the enlightened view of inventory is the most critical thing we can do right now in this market. And as production is number one. So if we do things that are counterproductive to production of housing, we are going to do more to solving our housing crisis. So it's true, even putting in lieu fees is an impediment to production, but it is a better one in my view. And even if it's used for things that, if you can't build housing, let's say we use it to improve bicycles movement through the city, or we find other ways to quality of life somehow, or put more money into our parks. I mean, I'm not against some effort to improve the community's benefit. That makes sense to me.
Yeah.
If you
You mentioned earlier, though, real quick on this, an incentive is different than a disincentive. And I think that should be highlighted. If you get bonus density for adding some inclusionary, well, there's an incentive there, and you can figure out if you could underwrite it or not. I think it's easier for approval bodies to approve projects with bonus density for that reason. But I think a disincentive is just that, and it is going to discourage a certain type of behavior. And behavior in this case, that's building more housing. So if it's disincentivizing building more housing, it's probably not a good policy.
Thanks, Andy. Real fast, Peter, can you tell, I mean, while you're doing the project here, there was an article about you. Can you tell if the proposed FAR multi-unit program will be more financially feasible than the expiring AUD? I don't even know if you looked at your project with that. You probably don't want to be sideswiped, but do you have any gauge if FAR would be,
I think the FAR is going to be a little bit like the adoption of the AUD. It's going to create more opportunity for housing production. I think it's a really good effort in the planning department to get people to focus on that. So yeah, I think it's going to be a potential game changer.
Thank you. We've got a couple questions. These are timely. What are your thoughts? I think they're open to anyone. What are your thoughts on SB 9 and 10? From a developer standpoint, how do you think that will help provide housing for Santa Barbara and Montecito areas in the near future? Is there a potential role for developers through SB 9? I.e. developers carry the cost of demo and rebuild in exchange for lot splits. Kind of similar types of questions, if you could take that.
Yeah, well, I mean, I think it makes, it will certainly open up some opportunities for, it's hard to build a 50-unit project, or as Peter's building a 78-unit project. That's an enormous amount of capital and, lending power and so on and so forth. So these bills are designed to allow duplexes and such to be built on single family lots, which, would just bring more people into the fray that could, increase the housing supply a little bit. I mean, I don't think you'll find anybody that says that, what adding a unit is a good thing, in our market. We have, as I said, 22,000 households that rent. Median price of a new home is what, $1.5 million getting there. So it's really hard to afford to live here and to buy a home, and just unrealistic for much of the population. So yeah, I would think that would certainly help.
Well, it's interesting because I think the ADU has actually been more successful than the AUD in terms of inventory of units in our city. I'm not sure if I'm right about that, but I think that's true. I think there's tremendous potential. ADU has shown that. Now it'll be interesting because basically what you're doing is rezoning. That's really what they're proposing. And, all of this discussion wraps around that very concept. Is the community in general prepared to accept higher density to solve an underlying fundamental acute problem for coastal California? And I think we probably need to look at that hard and figure out which communities can accept that, because it's a pretty good solution. If we can make it the process as streamlined as we've made the ADU in the county, for instance, has made the ADU pretty seamless. I mean, I did one in my house, and it made the other things I've ever done look like this was without effort. So I think there is potential there.
Yeah, thank you. Question to all, what are your thoughts on the pushback from people who have no growth attitudes and say it's not a supply and demand issue?
Well, it is. I mean, we have vacancy factors that's, ranges from 1% to 2%. I think it's actually less than 1%. I mean, go try to rent an apartment, see if you can find one and how many choices you have. It's really limited. In my former life, I think in town we probably had over 100 employees, and just trying to recruit people to come work here, given the lack of housing, how expensive it is, it's huge challenges. We haven't even talked about that, but if you're running a business, a growing business, that's why so many of them really have to leave. As soon as they get to a certain size, their boards and investors will say, it's probably time you have to move out of Santa Barbara. It happens all the time. So, some people just don't want much to change. And, I can sympathize. We all love our city, and building new things is scary. But the reality is we have to be more viable than just a tourist city, and find places for our, family members and kids to work. And so, yeah, I mean, just go try to rent an apartment right now. You tell me if it's a fun experience. I don't think it is for most people.
Gotcha. Anyone else? I'll throw just jump in. This is kind of a roundtable open discussion. We have another question. Do you think commercial zone buildings should be able to be converted to residential units for example, State Street retail?
Well, for sure, that's the great place to put units because we need more bodies, more activity downtown and outside of the business hours. So, and the reality is we have way too much, we have a surplus of retail, right? The only inventory we have that is in excess of demand is retail in Santa Barbara. Outside of Santa Barbara, it's a tighter market. Santa Barbara has an excess supply of buildings dedicated to retail. So I think we're going to see some of that occur naturally, organically, particularly if the city adopts a FAR criteria for the density. And so I think we'll see that, but it's not without obstacles, as I described earlier. State Street is a classic example. If you look at the parcel map, they're narrow lots and they're deep. So you've got to assemble multiple owners typically to make it feasible. There's not many big parcels and big natural buildings. And then, of course, you got all the building code issues that come with going from commercial to residential that make it challenging. But I think there's a natural interest and an organic movement on the way downtown, and I wouldn't be surprised to see more come along because there's not any opportunity in the existing use, so it's going to be forced upon owners, really.
John, Andy, anything to add?
I mean, I'm in favor of things happening organically. So it would seem more flexibility in zoning would be a good idea. And as Peter mentioned, though, I think there's a practical aspect of assembling that is going to be a lingering challenge. But you know, I do think we all want to remain open to kind of the organic nature of things, especially in times like these where things are changing fairly rapidly.
Thank you. Here's a good question. How do we build affordable units for our workforce? You know, teacher service industry, people who need to rent a lower based on income. If it doesn't pencil, who builds it?
Oh, here you go. Let me jump in on this one. So this is a developer's favorite answer. The question is asked, well, why do you only build A apartments? Why don't you build B and C apartments? Why don't you build workforce apartments? And of course, the standard answer is that we do. It's just 20 years later. So you have the only way it really pencils is on the A side. That's the only way you can justify the cost, and you barely make it at that. But if you have more housing stock coming into the community as things age, you know, you have A, B, and C. It's like the family in the car. Dad gets the new car, oldest brother or sister gets the hand-me-down, get the hand-me-down, but you have multiple cars in the family. So, you know, I think the answer is allowing for more housing stock in general.
Yeah, I've seen this. What you're suggesting is a tiering of product type, right? I mean, in the rental product, like we went so long without building it, we only really kind of had one grade of rental product, right? Mm-hmm. It wasn't the newest stuff. It was probably older. So are you suggesting that as we kind of tier the rental product, that helps affordability?
I'm suggesting that if you build more apartments, naturally they enter at the higher side of the market because that's the way they're underwritten. But with more housing stock, you're going to have more product which ages over time. So you're going to have like A apartment, which is the brand new stuff. You're going to have B stuff that's maybe 20 years old, and you're going to have C, which is product that's maybe 50 years old. But more means you're going to have more at each tier. That's the way you do it. I mean, that's the way it's historically been done. But you can't underwrite. It's very difficult to underwrite to workforce. And I don't mean to belittle workforce housing. It's just the fundamentals cost what they cost. I mean, it's not as easy as saying, well, we're going to put in a different kind of countertop. That doesn't move the needle.
Understood.
Yeah.
John Blair, how can we educate the city and decision makers on the issue of housing?
Well, I think including having these kinds of conversations, I think make a lot of sense because it is a full team effort, meaning that you have to represent all sides, people that are concerned about too much growth, people that are in a position where they need to rent houses, design aesthetics, how do we make projects fit into our city landscape. And then equally important is talking to the people that can actually make it happen and will risk the capital and their time to come in and really, participate and go for it. And so I think as we've touched on today, there's just a disconnect between the developers and kind of all of those other groups. And it's not for lack of wanting to do it. As I said earlier, Andy and I would love to ride our bike down to a project rather than get in a car and drive for 2 hours. I could have a beer with you after work, it'd be great. So, the motivation is there on our part, but I just think there needs to be more inclusion of our side of things. And, the only time you really read about or hear from developers usually is when there's some issue at a AVR meeting or something's getting appealed to city council or there's some issue. And so, we all have thick skin, but we don't come across as like the favored people of the city, business community. But, as Pete, I think Peter brought up a good point. It's a very important, vital service to our community. So that to me would be a good place to start, just to hear our viewpoints a little more.
This is an interesting follow-up, kind of conceptual in nature, but interesting question. What happens if no one wants to develop? Will the South Coast fail? Anyone?
So that's just a provocative question, right? Do we want to stick our head in the sand and ignore our acute problem and not provide the most elementary thing for our community? But that's really what we face, right? Every time we present a project, there are numerous people we can count on that are hell-bent on no change. And that is their mission in their life, is to spend time in front of public officials complaining about any change. But it's a selfish behavior if you really think about it. And, we all live here. We all are trying to make a living. We all need a safe place and a roof over our head. And so let's find a way we can do that without throwing dispersions at certain industries. And development doesn't deserve the dispersions that we get and the reputation of being greedy. That's just not true. It's a tough business. It's fun and it's creative, but it's a tough business with extremely low margins. And South Coast makes it riskier than other environments.
Thanks, Peter. I'm seeing John and Andy not jump into that one. So
I think it was very well said.
Okay.
Yeah, Peter, I think you cleared the boards for both of us.
Yep. Well said.
Good. Peter, right back at you. Would you be open to having public comment from the community offline and give advice on design and layouts?
Okay, I'm not really sure on what they're asking on that, to be honest.
I thinking it's how open would you be to having comments from the public on offline, kind of with respect to design and layout? Is that a good equation? Is that not a good equation? Is that better to happen in the public forum? I mean, if we talk about better relationship building.
So
is
that,
that
okay,
active or not?
now I understand more about the question. I think communication is everything, I mean, and, Andy pointed out, before you even start projects, there's always a neighborhood outreach. You want to tell people in advance. If you look somebody in the eye, if there's a human condition which occurs outside of the public forum, generally I find it to be highly productive. So yeah, in some respects, maybe to encourage that communication could be very productive and lowers the distrust and elevates trust in the process or in the person that's doing it, right? I think any way we can improve discourse in our country is in and outside of building is going to be productive.
Okay.
Yeah, I'd be all for it. I think anything that helps, like as Peter says, increase communication and reduce, distrust could only be helpful. So I think more is certainly better.
One of the things that happened with technology that's helped a lot that I commend the HLC for adopting recently is story poles have been traditionally a point of contention and used by opponents of projects pretty skillfully. And the HLC on my most recent project said, we don't need story poles. They tell us nothing. But technology, as with the 3D building of the drawings now, have provided such great context that people can understand the buildings more. I mean, I even think about Andy and John's project. I suspect if they had been able to use 3D, they might have had less resistance, because whether it's 38 or 34, give me a break. There is no difference to the pedestrian. So it's only to the decision maker that's getting the B in the bond. So that's another example of where our discretionary boards have adopted technology to the advantage of the community. Everybody can look at what this thing's going to look like on a computer now, and it's pretty impressive. And you don't need these poles up in the air that distort and kind of scare people and agitate people, right? I mean, they become the vehicle of opposition.
Perfect. I think I have time for about maybe one or two more, probably one more. Again, people are interested in SB 9 and 10. So I have one here. Do any of you agree with bonus density in residential neighborhoods, which I think is alluding back to SB 9 and 10?
I'm a little sensitive to the rezoning issue. I mean, we have established zones for a particular reason, right? So if you have a single family zone and now you can build a duplex, in a single family zone, that is a rezoning, certainly. So I think it would be better for the community to plan and zone appropriately for that community. I just think you can get into a bit of a drift situation. Although that being said, we do need more housing, but I think we want to be thoughtful and plan for where we want that to occur for a variety of reasons.
Mm-hmm.
Yeah, I mean, there might be some, the economics may drive that to some extent. So for example, you probably wouldn't execute a project like that in a neighborhood that was, really expensive to acquire the property. So it may just naturally flow towards areas that are a little more dense to begin with. So that might help. But yeah, I mean, Andy brings up a good point. You certainly want to have input when you do rezones, but we need housing. Again, we're just operating at such a low level of vacancy. It's just hard to find places for people to live.
Yeah, I always, I've been in the business for a while, and my observation is that the pendulum's never in the middle, right? We're either like super no growth politics, or now the state is swinging us the other way, which, it has some good, qualities to it, but the pendulum's all the way this way now. And so
Mhm.
how do we find that middle balance? And I'm sure housing is not the only.
I think it helps if I think it helps if we as a community can get our act together and provide for our own housing needs without the state having to step in and say, hey, listen, you dysfunctional kooks, get it together, or we're going to get it together for you. I don't think we want that.
I don't think anyone wants that. Yeah.
Yeah.
I think that's it. I've got 3 minutes left. I know John Standring wants to come back on, but this has been an absolute pleasure. I am getting great feedback from the attendees that this was really helpful and valuable to hear from you guys. So, Peter, John, Andy, thanks again for your time. I'm gonna shut it down here.
Okay.
And back to John Standring.
Thanks for the opportunity.
Thanks for having us.
Yeah, thank you guys so much. I mean, what a great conversation. I mean, I think it's really great for us to be able to have this platform. At CHC, we're really glad. So thank you guys. We know you're all very busy. Craig, thank you so much. And thank you for all the attendees coming and the questions. If for some reason we didn't get to your question or you would like to further discuss some of these matters, you can reach out to me personally, Craig, our executive director. Or if you want any of these slides, I know some of them looked a little blurry. We're happy to share those with you. This program will be recorded and on our website. And as I mentioned, again, thank you to my entire board, all these sponsors. Next month will be in the middle of October. We'll have updates on our second of 3 series. And thank you all for listening. I think you guys did a phenomenal job as far as talking about our communication. So I'm very, very proud of what we put together today and appreciate all of you guys for taking the time.
All right.
You
Thanks.
got it. Bye-bye, everybody.
Thanks, everyone. Have a good day.
You
Okay.
too.